Welcome to Black Entrepreneur Blueprint, the #1 podcast and resource for Black entrepreneurs. I'm your host, Jay Jones, and Black Entrepreneur Blueprint was created specifically to educate and inspire Black entrepreneurs to launch, build, and grow successful, sustainable businesses. Join us as we help build an economic power base in the worldwide Black community by building and supporting Black-owned businesses. If you're currently an entrepreneur or want to be an entrepreneur, you're invited to join us each and every week here at Black Entrepreneur Blueprint. Welcome to the BEB family and get ready to elevate your entrepreneur IQ. Welcome to the Black Entrepreneur Blueprint, episode number 608. I'm your host, Jay Jones, and today we have another outstanding and informative show in store for you. Today's show topic is titled, Why Being Profitable Still Isn't Enough to Get Funded. Why being profitable still isn't enough to get funded. Now, we know as entrepreneurs, in order to grow and scale, many times we need to get business funding. You can also do it, bootstrapping. There are a lot of successful companies that have done that. But in order to speed up the process, you need to get funding. So in this episode, I'm going to expose one of the most frustrating truths for entrepreneurs. And what it is, guys, profit does not equal fundability. So many Black business owners right now doing real numbers, you're serving real customers, and you're still getting denied loans. And we're going to talk about that today. Now, before we get to today's content, I just want to share a few things with the Black Entrepreneur Blueprint family. First and foremost, I want to welcome all first-time listeners to Black Entrepreneur Blueprint. Welcome to the BEB family. Please stick around until the end of today's broadcast, and I'm going to share all my social media contact information and resource links, such as the link to the website, guys. We have a ton of free resources at blackentrepreneurblueprint.com. Make sure you go to the website, hit the Learn tab. There's a drop down, and we have all types of content on marketing, growing and scaling your business, mindset, e-commerce, everything you need to move your business from point A to point B. Now, let's get ready for today's show content. So today's episode is for most entrepreneurs who may be a little confused right now. So your business is doing numbers, you're making money, and it's alive and moving. But when it comes to getting funding, all you hear is crickets. You aren't able to get the funding you need to take your business to the next level. And the question you keep asking yourself is, how can my business be profitable and still not qualify for a loan? And that's exactly what we're going to unpack today. So on today's show, we're going to discuss and dissect one of the biggest myths about getting your business funded. Also, how banks really think and why this hits Black entrepreneurs harder than most other entrepreneurs. But I do want to tease next week's episode. So in the next episode, guys, it's almost like a part 1 and part 2. I'm going to explain why the system works this way and how we can beat the system. And next week's show is titled, The System is Rigged, Why Banks Say No to Black Businesses and What to Do Instead. That's going to be next week, episode 609. So these two episodes, 608 and 609, are basically congruent. So you want to make sure that you watch or listen to both of these episodes back to back. So one of the biggest things or most frustrating thing that a business can do when a business thinks they're doing everything right and you're hitting a wall and you still can't get funded. You have customers, your revenues are coming in, and the bills are getting paid. But the banks are saying stuff like, come back later, you're not ready yet. You need more time in business. Your file doesn't meet our criteria. And they never really explain to you what that criteria is. And here's the truth that most people don't realize. Profit, guys, does not equal fundability. Profit does not equal fundability. And until you understand that, funding is always going to feel some type of way. It's going to feel random to you. But there's a science to getting funded. Now, I'm in the mortgage business. I do residential and commercial businesses, and I do business loans. So I am very aware of what it takes to get funded, be it if you're going for a regular mortgage, you're buying a house, if you're doing a commercial or investment property, I do that all the time, and also business loans. So I do all facets of lending. So I understand what fundability means and how you have to position yourself to it. Now, there's a big myth out there, guys. So most entrepreneurs believe that this lie is if my business is profitable, the money should be available. But it's not really like that. I'm going through an actual deal right now with an investor that has multiple properties. And he keeps asking me, he's like, hey, man, why does this lender want this information? And where we're working on another property, why does the other lender want additional or different information? And I had to explain to him, I said, every lender has its own set of guidelines and rules. I said, there's no uniform lending code for specific loans. Each loan is into and of itself. Yes, there's some uniform things that they're going to look for, income, time in business, assets, and all that good stuff, depending upon the loan type. But there's no one uniform thing for all lenders. Each lender is different. So you have to recognize and understand that you need to be able to position yourself to be fundable. And the way to do that as an entrepreneur is you need to connect with somebody that has experience in getting business funding, because based on the different lenders, there are different guidelines. And that's why brokers are so important. So I'm a mortgage broker. So I have connections and I'm linked up to over 50 plus different banks and lenders. And so when I look at somebody's profile, I'm able to say, okay, based on your profile, these are some of the lenders that will probably, or you have the best chance of getting money from. So you have to understand profit does not equal fundability. And until you understand that, funding is always going to be random. Now, let's talk about the biggest myth that's out there when it comes to lending and not getting funded. So most entrepreneurs believe this. They believe that if my business is profitable, the money should be available. Many times it is. Now, I'm not going to get into the different types of loans that you can take out. There's tons of them. There's all types of ways to access capital when you're a business. It could be a merchant cash advance. It could be a line of credit. It could be an SBA loan. It could be a loan against the building. So there are tons of different ways. So I'm not going to get super specific here. But the biggest myth that people think is that if my business is profitable, the money should be available. Now, that sounds logical, but the banks don't lend based on logic, okay? They lend based on risk models. I was just telling one of my clients, it's all based on risk. The higher the risk, the less likely you are to get the loan. The higher the risk, the higher your interest rate is. So I want people to understand that your credit profile, be it your personal credit profile and your business credit profile, is like a fingerprint. Everybody's credit profile is totally different. So you and I could have the same credit score. Say we both have a 750 credit score. Now, my credit score could be comprised of a mortgage, 2 cars, 4 credit cards, a personal loan or whatever. And I have a 750 credit score. Now, you could be fresh out of college and you have 1 credit card for $5,000 and you have a 750 credit score also. But if you put the credit profiles side by side, I'm going to be the stronger borrower. I'm going to be the stronger applicant. I have more credit. I've demonstrated that I've been able to pay credit for longer years than you have. So when you go and you start talking to people that aren't in the business or don't understand the business, and they tell you, oh, and I'm using a regular mortgage, personal mortgage as an example. Yeah, man, I got a 750 credit score and, my interest rate is 5.75%. And somebody else will be like, well, mine is 6.25%. But their credit profiles are different. Somebody may have a lot of assets. Somebody may be newer. So everything, guys, is based on a risk model. And profit is only one small part of that equation. So you can have a profitable business, but it's only a part of the equation. So banks aren't asking, is this business working? They're asking, does this profile fit our risk box? All right. They're not asking, is the business working because you're profitable, but they are asking, does this profile fit in our risk box? And those are two very different questions. Okay. So you have to understand that. But that's one of the biggest myths that entrepreneurs have. Hey, my business is profitable. I'm making money. I should be able to get loans. Now, let's talk about how banks really think. And you have to understand this to make yourself or put yourself in a position where you can get funded. All right. So I'm going to simplify this and give you a 10,000 foot view. I'm not going to go too deep into it because we don't have enough time. But banks do not fund hustle. That's a big word in our community. Hustle. Hustle is good, right? But we have to be systematized. Banks don't fund hustle. Banks don't fund potential. Banks don't fund passion. And banks don't fund ideas. Now, is that always the case 100%? No. People do get ideas funded, but many times you have to have that complexion with the connection to get that done. Okay. If you looked at the .com bust years ago, people were getting funded all types of money for silly ideas that had no legs. Right. And as a former stockbroker back for Dean Witter and Merrill Lynch years ago, when we saw a stock or an investment that had no legs, what that meant was there was no real foundation behind it. In general terms, once again, banks don't fund hustle, potential, passion, or ideas. What they do fund, guys, is patterns, predictability, history, and structure. Okay. That's why two businesses making the same amount of money can get two totally different outcomes. One can get approved for the loan and the other gets denied. Same revenue, different profiles. It's the same thing I just talked about with the credit profile. You have to have the right profile in order to get funded. You have to be fundable. All right. So now let's talk about the 4 areas that matter more than profit when it comes to getting a business loan. Let's first talk about what really moves the needle. And that number 1 is credit. And we're talking about personal and business credit. Personal and business credit. So banks want to see how you've handled debt before, not just that you make money now. Okay. If your credit history shows volatility, late payments, or thin files, profit won't save you. So let's kind of talk about that a little bit. Credit, personal and business. And I know there are a lot of these gurus out here talking about you don't need personal credit, to build business credit. That is true. You don't need personal credit to build business credit. And if you know how to set up business credit correctly, that's its own separate profile. But many times what they don't tell you is they're also going to ask you for your personal credit. Okay. So you need to understand that credit, your personal and business, are essential to getting funded. So you want to make sure your personal credit is on point also. And let me just say this from a person that's almost lost it all twice with businesses that tanked and was blessed to be able to come back and build 2 separate $1 million businesses after the fact. The beauty of credit is, guys, just understand it's a snapshot of where you are today. That's all it is. So if you have bad credit, that's okay. You can learn how to manipulate and fix your credit. Okay. Don't spend money, thousands of dollars with some of these gurus that are going to use some unscrupulous and unlawful practices. Okay. Like filing police reports saying that somebody stole your credit card and ran it up. That's not legal, and you can get jammed up with that. And so a lot of these credit repair gurus, they do slick stuff like that, but you don't even know that they're doing it. Matter of fact, there was a sister, I can't remember if it was North Carolina or somewhere. She had a very successful credit repair business. Come to find out, she got shut down and got sent to jail because every dispute that she had, she used the same police station. It didn't matter where you live. You could live in Philadelphia. And for some reason, she was using one jurisdiction. I think it was in North Carolina or something, because somebody got their credit card stolen and she filed a police report. She took that same police report, doctored up the names and the times and the dates and all of that. So everybody that she was trying to get their credit report clean, she was using the same documentation from the same police station. Come to find out, the feds got a wind of it, and they found out there are over a couple of hundred fake filings of this theft reported. And so what happened was she was getting the stuff removed from the credit reports when she was sending the fake police reports to the credit bureaus, but it caught up to her. So you want to make sure that if you are using credit repair, make sure that the people that you're using are above board. Okay. You can do credit repair yourself if you know how, but I get it. Sometimes you just rather pay people to do it for you. So once again, personal credit and business credit are essential in being able to get funded. Now let's talk about the second area that matters more to the banks than profit. And we're talking about cash flow consistency. Cash flow consistency. And that's the optimum word. They don't care about one good month, right? Once again, you have to look into it. They're going to take your file and they're going to break it down with a fine tooth comb. So they want to see predictable deposits, clean bank statements. And when I say clean bank statements, no overdrafts, bounce checks, things of that nature, and revenue stability over time. Random spikes in income, that looks risky unless you're a seasonal business. They understand that. So if you have a bike rental business at the beach, they know that during the spring and summertime, that's your high season, right? So they know that's when the majority of your revenue is going to come. Well, that is if you live on the East Coast or somewhere where it gets cold in the fall and winter. If you're out in Florida, you probably got a 12-month. Now, probably you do have a 12-month business. But so cash flow consistency. You want to have predictable deposits, clean bank statements, revenue stability over time, and you don't want the random spikes because it looks risky, okay, unless you have a seasonal business and it makes sense. Remember, everything from the bank's or the lender's perspective, guys, is risk-based, okay? And what we're talking about today, guys, is why being profitable still isn't enough to get funded, okay? And right now we're giving the 4 areas that matter more than profit when it comes from a lender's perspective. We just talked about credit, personal and business credit, cash flow consistency, which we just talked about. Now let's talk about business structure. Now this is huge, guys. This is something you need to pay attention to. Many entrepreneurs are profitable, but they're not properly structured. All right. So some of the things that can go wrong: commingling of funds, missing documentation. Now, to lenders, that screams chaos, even if the business is working. So your business structure: are you an LLC? Are you an S Corp? Are you a C Corp? Or are you a sole proprietor? So you have to figure out what makes sense. For me, I have 4 LLCs because I have 4 different businesses. So that may make sense for you or it may not. So you need to consult with a professional, be it a CPA, an accountant, or some type of advisor. But your business structure. Also, you have to be, in good standing. A lot of people will start LLCs and they won't pay their state or their jurisdiction taxes each month. And now their LLC is not in good standing, meaning that you haven't been up to date with your filing fees. So make sure you do that. Another thing, commingling of funds. Oh, and this is huge, right? Commingling means putting your business and personal funds together. So, for example, if you're trying to establish business funding or business credit, you want to have a separate bank account, guys, for your business versus your personal. And as an owner of a business, you can draw off of that account. So you can write yourself a check or transfer money. Just note this is the owner's draw. But you don't want your paycheck and, you and your wife's or husband's paychecks or partner's paychecks coming in the same account as your business proceeds. That's called commingling of funds. Let me give you a real life story about downfall of commingling of funds. So I knew a gentleman that ran a payroll company years ago, and he should know better. He actually bought the payroll company. He didn't do a big background or a good background check. Come to find out the payroll company was a little shady that he bought. Now, he actually the company didn't pay the federal taxes that they have to match employees. And what happened was he started having the payroll funds deposited in his personal account, and then he would take the money out of his personal account and then try to pay the actual taxes owed to the government. So if you haven't owned a business before, if you have employees, you have to match FICA and FUTA. So if you give an employee $1,000 check and their taxes are $250, you have to match that. So that $1,000 check you just paid your employee may cost you $1,250, $1,300, whatever it may be. So because when they went to court, because he had commingled his funds, meaning he had combined his personal assets or personal funds along with the business funds in the same account, they came after him personally. And they tried to take his home and all of his assets because he commingled funds. So never, ever, 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 all right, commingle your funds. Set up separate accounts. And that's another thing, guys. You're not properly structured if you don't have a business account. Okay. So you want to do that. Another thing when we're talking about business structure is missing documentation. Okay. So you have to have your EIN information, your LLC, if you're doing an LLC, your operating agreement, your formation documents. All of that stuff is important and you need to have that. So to a lender, that screams chaos, guys, even if the business is working. Okay. And these are 4 areas that matter more than profit. Number 1, I talked about credit, personal and business. Number 2, cash flow consistency. Number 3, business structure. And number 4, financial documentation. So no clean books equals no confidence, and you're not getting a loan. So here's what I'm going to tell you guys off the rip. So if you have a business, you need some type of software. I use QuickBooks. There's other software that out there, FreshBooks, QuickBooks, whatever you want, but it keeps everything simple. And the online version of QuickBooks connects directly to your business accounts, your bank accounts. So you can clearly and easily create a profit and loss statement, all of that good stuff, income statement, projections. So you need to have that. So financial documentation, no clean books equals no confidence from the prospective lender. So if you can't clearly show a P&L, profit and loss statement, bank statements, or revenue purpose, the lender won't fill in the gaps for you. It's all about presentation and positioning. So those are the 4 things that lenders look for more so even than just profit. So now let's talk about why this hits Black entrepreneurs harder than many other ethnicities and many other entrepreneurs. And we're just going to be honest right here, guys. The system hits Black entrepreneurs differently because many of us are first generation business owners. So if we don't have anybody to teach us and show us the ropes, there's mistakes that we're going to make that could be avoided if we had that guidance and structure. So even if you're a first generation business owner, link up and connect with somebody, be it a mentor or advisors that can help you. Another thing is we're first generation wealth builders. OK, a lot of other ethnicities teach about building wealth from infancy. OK, I have one of my good friends is Jewish and we talk about this all the time. And he talked about from the time he can remember learning how to talk, they talked about how to make money, what industries are good, investing and saving your money, not spending your money on dumb stuff, Louboutins and Jordans and all of that stuff until you have your foundation built. OK, so and these are some of the reasons why this hits Black entrepreneurs harder. Also, learning the rules after we start playing the game. You ever do that? You've been playing something and then you realize, man, I don't even know the rules to this. It's funny. I just started playing pickleball about a year ago and I didn't realize that I was playing wrong because I was playing with other people that were as inexperienced as I was. And then when I went to this one club, they were like, man, what are you doing? So I didn't realize some of the intricacies and the rules. So just imagine being successful in a game that you don't even know the rules. You don't even know what you're doing. Many of us weren't taught about business credit or banking relationships or financial packaging. We were always taught to hustle our way into profit, but not the positioning. So positioning is the key. It ain't what you do, it's how you do it and how you present it. Okay, so as a mortgage broker, like I said, I handle residential transactions, commercial transactions, and business funding. So I understand how you have to position the prospective borrower to get the loans done and loans closed. And that's the thing, guys. So I remember, in terms of not knowing anything, I went to college, and I don't know if they're still doing this, but years ago, you go to college, man, you sign up for a credit card. They used to be right on campus. You sign up for a credit card right there. Now, my mom and my dad and my step-pop, whatever, they didn't teach me a damn thing about credit, right? So I get this $500 Chase MasterCard like my first semester. Maybe I was in college about a month. First thing I did, I went to Center City. I bought me 2 Adidas sweatsuits and some Adidas Top 10 sneakers. And this is back during the Run DMC days. And I had put $350 on that $500 credit limit right then. I literally got the card, and 2 or 3 days later, I did that. Now, I'm working work study in college. And back in the day, I'm making like $30 a week. That was enough to get me a little grub in my drink on, right? And before you knew it, I couldn't pay my credit card bill. So I had bad credit my freshman year in college. That was the only piece of credit I had. So nobody taught me about how to manage credit, how to position myself, right, for credit. So one of the things that I had to do was, obviously, I had to share this with my kids when they were growing up, and I was telling my girls, I'm very transparent. I'm like, yo, don't do like dad did. I came out of college. My credit was jacked up. I remember not being able to get a job I wanted in the financial industry at a bank because my credit was screwed up. You know, and that really taught me, man, I gotta get on board here. I gotta understand what I'm doing. That's the key, guys. And I taught my girls when they were in college. I said, yeah, it's okay to get credit cards, but you have to understand how to manage them. You know, one of the things I wish I did, and in retrospect, I should have got them joint cards with me where they're co-borrowers and they use the card. So I'm using the card, they're using the card, but I'll pay for the card as long as they don't buy something silly, right? But when they get out after 4 years, they're going to have a very good credit history, which starts them off, and they're starting off on the right foot. Now, the beauty of it, or the blessing, is anyway, they were able to do that on their own. So they both came out high credit scores. I told them only get one credit card. And then once you get a job, you know, you start establishing your credit like that once you have an income. But in terms of why it's harder for black entrepreneurs, guys, the real reason is we're not taught this. You know, we're taught that, hey, let's hustle, you know, let's get this money, then we'll figure the rest of it out. But other ethnicities are taught, and they understand the positioning that it takes. They have the foundation to be able to build, and the foundation is everything. So we need to learn how to pass this along to our kids and generations below us. So the real problem isn't that banks don't want to lend. The problem actually is that most entrepreneurs are never taught how to look fundable. So when they apply, they're asking the wrong question. Instead of asking, why won't they give me the money? The better question is, what does my business look like to the lender? Now that shifts and changes everything. Don't say, why won't they give me the money? Ask yourself, what does my business look like to a lender? And you have to look at it from the lender's perspective. And that is the key. And I tell all my clients that right now, you have to position yourself to be able to get that paper. Now, before we get to the last segment, which is some important information, let me just share a few things with the BEB family. Once again, let me share my social media contact information and resource links real quick. I mentioned at the top of the show, guys, go to the website, blackentrepreneurblueprint.com, hit the Learn tab. There's a drop down. We have all types of resources that'll help you move your business from point A to point B. Now, if you want to get in touch with me, anything long, hit me on my email, jjones@blackentrepreneurblueprint.com, JAYJONES@blackentrepreneurblueprint.com, Facebook, Black Entrepreneur Blueprint, Instagram, I have 2 IG accounts. The first one is J Jones for Real, JAYJONES, the number 4, REAL. Second one is Black Entrepreneur Blueprint. Twitter or X, you can connect with me at jjones001, JAYJONES001. LinkedIn, just go to LinkedIn, type in J Jones Black Entrepreneur Blueprint. Also, YouTube, make sure you hit that subscribe button to YouTube. We have additional content on YouTube that is not on the show. Go to YouTube, type in Black Entrepreneur Blueprint, and hit that subscribe button. So wherever you're watching this or listening to this, make sure you hit that subscribe button so you can be alerted to any new show that drops. We drop every Monday morning, 5 a.m. Eastern Standard Time on all your major podcast platforms and YouTube. So make sure you hit that subscribe button and also share the information. This is a very dynamic episode. Funding is big in our community in terms of entrepreneurship, and we have to understand and learn how to be fundable. So please share this episode, and especially the next episode, episode number 609, which is a continuation pretty much. And next week's episode is titled "The System is Rigged: Why Banks Say No to Black Businesses and What to Do Instead." That's next week, episode 609. So share this with anybody that's an entrepreneur, because it's going to definitely help them, along with episode 609. All right, so today, guys, we focused on understanding how to get funded or what banks look for. So the 4 areas that matter the most, more so than profit to a bank, are your credit, number 1, personal and business. Number 2, cash flow consistency. Number 3, your business structure. And number 4, financial documentation. So in next week's episode, I'm going to go even deeper, guys. We're going to talk about why the system works this way, whether it's actually rigged, and what to do if traditional banks keep saying no. Because once you understand the system, you stop taking denials personally and you start to move strategically. Okay? So if today's episode hit home, do 2 things, guys. Number 1, first, share it with another entrepreneurs who are profitable but may be stuck. And second, pay close attention to the next episode 609, because understanding why being profitable isn't enough. It's just step 1. Learning how to position yourself to win is step 2. And that's what we're going to go over. So the first foundational piece we went over today, understanding why being profitable isn't enough. That's step 1. Step 2 is learning how to position yourself to win, how to become fundable. And this is super important. Now, I know many entrepreneurs like to bootstrap it. And if you like that, that is cool. If you're able to self-fund your business, that's a blessing. You don't have to worry about this. But if you're looking for outside funding to speed up your scaling and speed up your business growth, this is super important to you. So once again, tap in. This is episode 608. And next Monday morning at 5 a.m. Eastern Standard Time, episode 609, The System is Rigged: Why Banks Say No to Black Businesses and What to Do Instead. You have to know what the game is in order to win the game. You have to know what the rules are in order to play and win. You can't play and win the game if you don't know the rules. And unfortunately for us, many of us were not educated on the rules as when youngsters, when we were young. Our parents may not have done it. Our mentors may not have done it. We may be the first business owners in our family. You know, many of us don't come from wealth. Okay, so we don't understand that game, and we have to learn the game and understand how to get the money. There's people out here now that are plugged in that are getting money for some of the dumbest things I've ever heard of, you know, and more power to them. If you can get the money, you know, go get that money. But for us, the game is a little bit different. You know, the playing field isn't even. It's lopsided. So when we come to the table and we're trying to get a SBA loan, or we're trying to get funded, you know, through some type of business funding vehicle or bank or lender, we have to have our stuff correct. And so that's why we need our documentation in order. We have to understand positioning. We have to keep everything in order. Like I said, some of the first key things that you need to do, guys, is make sure that you have your documentation in order. Are you an LLC? Are you a sole proprietor, C Corp, S Corp, or whatever? Have that documentation. Is your business in good standing? Meaning, whatever municipality you have to register your business in. Do you have a business license? And is your business in good standing? Meaning that you're paying all your associated monthly or annual fees to do business in that state or jurisdiction. Because most lenders are going to ask you for a certificate of good standing. I had a client that had a successful business for 5 years, and one of the funding stipulations was a certificate of good standing. And he went back to the state. He hadn't paid any of his fees in 5 years. And so he had to pay the state back fees and penalty fees. And it cost him damn near $3,000-$4,000 just to get caught up so he can get a certificate of good standing. So that's something that is super important. All your documentation, like your operating agreement, if you're an LLC, your EIN number that you get from the IRS, everything you need, certificate of formation, all of that stuff needs to be on point. And we're going to get even deeper next week. And we're going to talk about credibility and fundability, like some of the foundations, like ensure your Secretary of State listing it matches exactly what your application does, your business name, address, and phone number. People think that doesn't matter, but it does matter. You want to verify all your business data is consistent across all business licenses, EIN, website, and online directories. You can use tools or services that update your business's info across everything on the internet. Also things like having a DUNS number from Dun & Bradstreet. And here's something that a lot of people don't know. Most people don't know. That NAICS code that you choose, make sure you choose that carefully. That's North American Industry Classification System. So if you choose the type of business you are, they're actually high risk industries that lenders look at that will not help your application for funding. It can deter your application. So you need to pick out your code carefully. And these are certain things that if you're not in the industry or you're not in the business of funding, you won't know. So there's tons of stuff, guys. So we're going to dig deep next week. So make sure you tune in. And please do me a favor, share this episode, number 608, and also next week, 609, with anybody in your network that has a business and needs funding. I'm telling you guys, this is going to be something that they do not want to miss. Now, I say this each and every week, family, because it's true. We get more and more downloads because of you, the BEB family. I appreciate you guys so much. Please continue to spread the word about the podcast, the website, the ecosystem, the online courses, everything designed to help you elevate your entrepreneur IQ and move your business from point A to point B by giving you actionable steps. Not a bunch of rhetoric or a bunch of rah-rah. We're talking about actionable steps that you can take to move the needle. Now, remember, guys, it's not about me. It's not about you. It's about us. It's about building an economic power base in the worldwide Black community by building and supporting Black-owned businesses. Love you guys. See you same time next week. Peace.